All right, let's get right into it. We are standing on the edge of a really massive change in how all of us handle our money. We're looking at the year 2026 as a tipping point, where artificial intelligence and blockchain are finally going to merge and create a totally new way to invest. And I'm not talking about a small update here. This is a complete rewrite of the rulebook.
So what does this shift actually look like in the real world? Well, take a look at this. On the left, that's the world we all know, right? Markets that open at 9 and close at 5. High minimums that keep a lot of people out of the game. Broker fees. Everything is led by humans. But on the right, that's the promise of 2026. Markets that literally never sleep. No minimums, so anyone can get started. And your investments? They're run autonomously and are hyper-personalized just for you.
So this brings us to the main event, really. We're talking about finance's next big shift. This is all about moving away from the big, centralized banks and institutions that have kind of held all the keys for centuries and moving towards a future where finance is decentralized, it's automated, and, it's ultimately in your hands. So how on earth does any of this actually happen? What's the engine driving this whole thing? Well, it really boils down to two key technologies that are finally ready to work together. Let's break them down. First up, you have something called a personal AI hedge fund. Just imagine having a brilliant, tireless financial genius who works only for you around the clock. That's what this is. It's a piece of software that's constantly scanning the entire globe for data and making these super complex trades that, until now, you'd have to be a billion-dollar fund to even attempt. The second piece of the puzzle is the custom synthetic asset. Now, this sounds way more complicated than it is. Think of it like a digital receipt. It's a token that lives on a blockchain, and its only job is to perfectly mirror the price of a real-world thing. Could be gold, could be a share of a company, could even be a tiny piece of an apartment building. But you never have to actually own the physical thing.
And this is where it all clicks together. Your personal AI takes these synthetic assets, these digital slices of real-world value, and uses them like building blocks to manage your money. It can trade a bit of gold for a sliver of real estate, then jump into tech stocks all in the blink of an eye any time of day or night.
Okay, so you're probably wondering what's actually happening behind the scenes. Let's pull back the curtain and look at the continuous loop that keeps this whole thing running. It's really a four-stage process that just repeats endlessly. First, the AI is just drinking from a fire hose of data. Global markets, news, social media, you name it. Second, the system creates those synthetic assets it needs on the fly. Third, the AI just goes to work, executing its strategy, moving capital around. And finally, and this is super important, a digital pool of collateral backs up every single trade to make sure it's all worth something real. Now, for that loop to work, you need these four core components all working together like gears in a clock. You've got the AI agents, they're the brains. They run on the blockchain networks, which is basically a super secure, transparent public record. Then you have price oracles. These are critical. They're the bridge that tells the digital world what things are worth in the real world. And finally, you've got liquidity providers, which are just pools of money that let all the trading happen instantly. They all have to be in perfect sync.
Okay, so that's the tech. But honestly, who cares about the tech if it doesn't do anything for you, right? So what does this actually mean for your money? This is where it gets really, really powerful.
I mean, check this out. This is one of the best ways to understand it. With these synthetic assets, you don't need millions of dollars anymore. For $50, you could own a tiny digital slice of a Manhattan skyscraper, or a rare piece of art. It completely redefines what it means to be an investor. This shift basically hands you a set of financial superpowers. Suddenly, you get access to the kind of returns that used to be just for the super wealthy. You can build a portfolio that perfectly matches your personal values. Maybe you only want to invest in green tech. The AI can even automatically work to lower your tax bill. And maybe the best part? Total freedom. You can sell a position at 3 a.m. on a Sunday. The market is always open for you.
When you boil it all down, what you're really getting is a digital twin of an elite fund manager. It's got all the skills, it works 24/7, and it's dedicated only to you for a tiny fraction of what a human would cost.
But, and this is a big but, with all this new power comes some very real risk. This system is revolutionary for sure, but it is not foolproof, and we absolutely have to read the fine print before jumping in. It's the question you have to ask, right? When you have a system this complex, this automated, moving at the speed of light, what are the hidden traps? Okay, let's break down the four big ones. Forget the jargon, here's what it means for your cash. First, smart contract risk. A bug in the code, just one tiny mistake, could be like leaving the vault door wide open. Your account could be drained in a flash. Then there's depegging. That's when your digital slice of gold suddenly loses its connection to the real price of gold, and its value just evaporates. There's also algorithmic bias. The AI learns from the past, so what happens when a totally new crisis hits? It could get blindsided and make a terrible call. And finally, regulatory uncertainty. The government is playing catch-up, and the rules could change on you overnight.
And there's one more thing we rarely think about: the actual physical stuff. This whole digital universe runs on massive computer servers in a data center somewhere. Your fund, your money, it all depends on them having uninterrupted power. A simple hardware failure could spell disaster.
So, as we wrap this up, it's pretty clear this isn't some automatic, perfect upgrade for our financial lives. The 2026 shift isn't just something that happens to us. It's a future that presents a very real set of choices and trade-offs for all of us.
It really all comes down to this balance right here. On one side, you've got this incredible promise, access like never before, total personalization, and just amazing efficiency. But on the other side, you've got the very real perils: flawed code, biased AI, and the government changing the rules. The potential reward is absolutely huge, but the risks, they are just as big.
And so that leaves us with the final and maybe most important question. When you look at both sides, the incredible potential and the serious dangers, you really have to ask yourself, is this the future you want for your wealth? Because for the first time ever, that choice might actually be yours.